and that is intangibles, including wood, plywood, plumbing, and of course the acclaimed granite marble top. Barry Ritholtz joins us now on A Shift to Observe. Barry, you have enjoyed the migration of about 20 miles from Southampton out to Watermill and out to the climes, the very affluent climes of the Hamptons of New York. The Hamptons of this nation are booming. We all know the reasons why. What does that signal about the future for the haves as they invest in the markets?
I think there are a couple of interesting aspects to this. And it's funny because we had a lot of work plans. We bought a fixer-upper, and we've had a lot of work planned over the past couple of years. Everything got put on hold back in February and March. And so as the contractors have started being able to do work, I'm always peppering them with questions. To me, that's the best economic research you can do. And it's shocking to find out that if you want lumber or Trex or TimberTech, any of the artificial lumber, there's an 8-week delay. If you want PVC vinyl fencing, it's 12 weeks on back order. Granite, best of luck. You could finish a whole kitchen and you may not have the countertop or the backsplash in for months afterwards. People figured out that they're going to be stuck at home 24/7 for the foreseeable future, whether it's 6 months, 12 months, who knows? Right. And they're fixing up the place where they work, live, and play. It's one location.
But the arch question here, Barry, that is so important is that is the haves. That is a part of America literally booming in service sector and high computer value areas. How do they adapt and adjust to the horrific unemployment we see among the have-nots?
Well, that's really a question for Congress. One of the reasons we saw a partial economic recovery over the past few months that seems to be plateauing is that Congress spent $3 trillion on a stimulus. They mailed a $1,200 check out to everyone making under six figures, and they extended and increased unemployment by $600 a week. The bottom half, bottom 2/3 of the economic earners in this country, when that money comes in, they go out and spend it. The haves, they're dabbling with the granite and the sub-zero fridges.
I'm struggling to understand exactly what this means in terms of what you invest in. You invest in granite countertops. You invest perhaps in lumber futures. A lot of people have been doing that. That's been going bonkers. There's a question, though, do you invest in cyclicals? Do you invest in the rest of the economy that really is supported by the others, by the potentially have-nots, and not just the people who are building houses in the Hamptons?
It's funny, when we talk about the haves and have-nots, every sector has become a winner-take-all bit of game theory. So when you look at retail, hey, BJ's, Costco, Target, Walmart, they're all doing really well. And of course, Amazon. The rest of the run of retailers seem to be struggling. The logistic companies that are actually overseeing the movement of goods around the country and the last mile delivery, they seem to be doing well. Home builders have snapped back. So it's very selective. It's very challenging to do a broad investment, a broad bet on the economic recovery, because it's so lumpy and unevenly distributed. And by the way, that is true whether you're talking about geographically, it's true whether you're talking about individual sectors within employment. And it's also true when you're talking about within the economic strata. The top 1 in 10%, the people who are fortunate enough to work remotely, they're doing pretty okay and spending much less than when they were going into the office on a daily basis.
I will just say that as we sit here, Barry, Tom Keene is doing some research on sub-zero backsplash with or without warming rack.
The warming rack is important.
Yeah, I see that you're really paying attention to this conversation, Tom.
I am. I mean, Barry and I are looking at what to do with the next 4,000 square feet of property. Barry, we make jokes about it, but it's not funny. And of course, we have a titanic political battle. What do you advise on allocation or ownership of cash given the immense turmoil we observe right now?
So, look, we saw what happens previously when there's a delay in elections, such as 2000. The market wobbles a little bit and then it goes on doing what it was doing previously. And we saw that post 9/11, and we saw that Pearl Harbor, JFK assassination, and I suspect even if this election takes weeks for there to be a final decision, as long as no one does anything really reckless, nobody advocates armed insurrection in the streets, which is not unthinkable that some people will take to Twitter and say really, really stupid, irresponsible things. If we get through the month of November, the world is just going to continue on as it's going. Hopefully, by sometime next year, we have a widespread distribution of a virus, of a vaccine for the virus. Remember, these vaccines are 50, 60, 70%. The data is not conclusive that your antibodies last forever. So this might be something that we're working around for, the next 5 or 10 years.
Yeah.
Who knows?